just write see my screen SMS, write SMS if you can see my screen, and you can see the word SMS, write SMS in the comment section. Alright, so let me talk about trading. What exactly is trading? Trading is interacting with the market, with the financial market, the capital market. You understand? It's trading is just like every other thing. Trading is buying and selling for profit. So whatever direction the market is going to, just be in that direction for you to be profitable. So whether you are trading Forex, you can be trading stocks, can be trading index, can be trading commodities. Alright, so let me start with trading Forex. What exactly are you trading in Forex and all those other things? No good. Alright, Forex. Forex is buying and selling currency pairs. So for you to be able to trade any Forex asset or Forex instrument, you need to buy one against the other. So that is actually the oldest and the most versatile form of trading, where you have bulls and bears. Bulls are in charge of raising the price. Bears are in charge of falling the price. So if you are in the direction of the bulls, the market is buying at that particular time. Then if the bears are in control, the market is selling. So let me tell you why it's like this in the Forex market. So remember I told you Forex is actually you must be against like two currencies against each other. So one, the bull side and the bear side. Take this currency pair GBP USD, Euro USD. Okay, USD card. So can you get the simple illustration here? This first counter currency, the bulls are the the bulls are the quote currency. Then the bears is the counter. Alright, so let's take the Forex graph. Let me just use a simple one now. 10, 20, 30, 40, 50, 60. Okay, 50. You see price coming. For example, let me say the bulls are in control of GBP USD. You see price is moving starting from 10, for example. It comes down to breathe. If you should breathe, it relaxes itself. It goes up again, finding level of balance around this region 20, goes up again, finding another level around region 30, then form some correction and start coming back down. Giving you this simple illustration, you just know that as in the market moves in circles, price between one point to another, movement between 10 and 20, and Forex is actually the pip count. That is Forex trading market. So let's take this chart, this graph GBP USD. For example, this is GBP USD chart. You see that pound was gaining. So now 1 GBP will be equal to 10 USD. For example, moving from here, the dollar will gain its value back to find support around this region. From there, people in charge of raising the pound will continue to strengthen it. Then when it gets to a very key level here, it has been tested right from time that if we should get to that level, the bears start coming into the show, bringing back the market to its previous circles. So when you see GBP USD falling, just know the bears are in control of the market. So that's that for Forex. That's that for Forex. So let's move to stocks. Stocks are companies. It's actually moved by companies' performance. That will lead to brand value. The product value. And response to backlash. Let me call it backlash. So for example, you see a stock like Apple. Apple makes iPhones. People are interested in iPhones. They buy iPhones all the time. Like they make other things to PC and all. Tesla, you see, they make products, increasing their brand value. So people start buying the shares after an IPO, what we know as an IPO, initial public offering. That is, they've opened themselves to the public, and for it to be part of Apple, or for it to own a share in Apple, it could be maybe starting from $10. Oh, Apple makes iPhones. People are now interested. Like, it's increasing their stock price based on their product value and maybe response to backlash to no criminal record, they file their tax returns and those things. Start increasing their price. People are now interested in buying more stocks. It now becomes expensive. So, for example, now people, when price is about $50, for example, someone who bought it at 10, if you should receive it at 50 or sell it out, sell his stock to another person at $50, what you are now doing is that you are selling your stock back to the market. So for example, you bought it at 10. So the difference between here 10 to 50, that is how you make your money in trading. So that's that for stocks. Let's go to index. Index. Index is a collection of stocks. Let's say Apple, Facebook, Twitter, Tesla, let me say Google, Microsoft, Amazon, all their company value is in one place. So this makes it an index. So you have different forms of index. You have Nasdaq 100, NAS 100 for short. You have the US 30 or the DJI, or you have the FTSE or the UK 100. Then you have JPN225, that's for the Japanese yen. You have so many index, and you also have some synthetic indices too, which are, because it's just one same mechanism of movement. Then you have commodity trading. This one, you are trading, let me say, for example, gold, coffee, cotton, so many other things against currency pairs like USD, that's the dollar. Mainly traded against USD, although gold could also be traded against Euro and GBP too. So what moves the price in commodity trading? The value of the asset. For example, if gold was worth 1,000, if gold was worth 1,000, moving 2,000, 3,000, moves like that. And so the difference between it moving 1,000 to 2,000 in your position and the amount of risk you are taking on each trade will actually give you your profits or losses. So trading is buying or selling. So for example, you buy at 10 position, then your stop loss around 5 there. No matter if it doesn't rise above 10 and comes maybe to 4-3, remember it moves up and down, you will be at low risk. But if it should rise above 10 and move maybe to 20, 30, 40, you'll be in profit. Then selling, you sell high, remember. So for example, you started selling your options around 100, or let me say 100 mark. Then it fell down to 90, 80, 70, and currently price is now what, when it was 100, that was when you sold. And now price is what, 60 for example, you're already in profit of 40. So different financial instruments have their dollar value for movement in price. So that's that for this video, this introduction video. The link to my WhatsApp group is there, so you get the full package and the full training on how to trade different asset strategies and all, and we'll go into a more live graph. So it's pause brain.